Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and banking awareness part of it, and basically we had started the discussion over the banking evolution. Okay, banking evolution is somewhat related with the banking history. If you remember in the previous lecture, I had told you about the evolution, right? And basically when we were discussing about the evolution, I had given you the example of human beings, right? Means how we evolved from Australopithecus africanus to Homo sapiens Cro-Magnon. Okay, so what were the facts and figures of this evolution is the part of evolution. Similar thing happened with the banking. Okay, like the banking practices were started in the ancient India, but how they converted and evolved in the modern times over the year. All right, so that's why evolution is some part of the history. Banking evolution is a well-defined part of history. All right. So basically, in this lecture, when we are going to further, okay, remember one thing. We will discuss the things which we had already discussed in the history part. That's a clear cut thing I'm telling you. Okay. Several topics you see are the topics which we had already discussed in the banking history. So now what is the motive behind revising them again? The first thing which I mentioned in my line is that revision. Second thing is their connection with each other. And third point is learn new concepts. Okay. I strongly believe that at a single point of time, you cannot tell everything about anything. All right. For example, this is you, this is your friend, and this is I. If I ask you about your friend, are you able to tell me each and everything about your friend in one single shot? It is not possible. Maybe you tell me about his name, his family members, and whatever. In the next meeting, you will tell me about his professional status, his studies. Thereafter, his other personal aspects, what is his behavior, and other things, right? So it means that nothing could be tell in the one single shot. The same thing which happened with the banking awareness. If I am telling you about the banking history in one lecture, it doesn't mean that I had provided you A to Z all the points regarding this. Okay, that's why the topics might be seen repeating again and again. But believe me, we are going to learn some new facts and concepts which we didn't covered in the previous lecture. Moreover, we will have a revision and we will be able to connect the concept with the things which we had learned so far. Alright, so this is the general overview which I wanted to give you before the lecture. And now I have given you. So let's move forward. So these are the topics we are going to cover. The banking evolution of India, key aspects of the banking evolution as we were covering. Second is there more details on the banking evolution. So these are the key aspects we are going to cover in this lecture. Alright, so let's continue. So now we have the regulatory reforms in the key aspects. The banking sector has undergone various regulatory changes to ensure the stability, transparency, and consumer protection. For example, nationalization of banks and liberalization policies are examples of regulatory reforms that have shaped the banking sector. Okay, means that when we were doing only the banking activities like lending of loans, right? That was we were doing in the ancient times. Thereafter, with the passage of time, we felt something different and then we started First Bank of Hindustan in 1770s. And thereafter, we have seen that we established the Presidency's Bank, the Imperial Bank of India, okay, and so other things. So it means that there will be a reforms, okay. It means that not only the nationalization and the liberalization policy shaped the banking sector, but also their evolution means a lot. All right. And these reforms were of a kind of regulatory in nature. It means that with the passage of time, there is a put on, or you can say there is a check put on banking activities parallel to its development. All right. However, the banks evolved during a certain period of time. They developed, but correspondence to it, we had to put a check on them. Like we nationalized the banks because the banks were ignoring the marginalized workers. They were only focusing on the, you can say, the persons who could afford the high interest rate, so that they could they could lend the loan to them more and more. All right. Thereafter, we had the liberalization. It means that, however, we nationalized the bank, but due to this, there was a poor performance observed during this time. Okay, that's why we have to liberate our policies in 1991. All right, so these are the regulatory reforms. Thereafter, we have the financial inclusion. Evolution of banking has also focused on promoting financial inclusion by extending banking services to unreserved and remote areas through specialized banks like payment banks and small finance banks. All right. About payment and the small finance, we will have a discussion in the lecture of types of banks in detail and depth. Okay. Till then, let me give you an overview. Payment banks are generally used to do payments by request of customer. Okay. For example, this is you, this is I. You had come to me and you had buy a product of rupees 10,000. Okay. So you don't have any cash with you. How could you pay me? Generally, if it talks about today's, then we using a QR code like this. We scan it or we put a mobile number and then we make a payment. So this payment could done by your normal bank account. It means the account which you are using on the normal basis. Okay. Second option is by using the payment banks. Okay. These are the banks which are only used for the payments. It means that they can give you the credit limit of rupees 20,000. Just take an example. Okay. So by using these banks, you could make a payment up to 20,000. Okay. This is the credit facility available with you. All right. And whenever you make a payment during a certain period of time, suppose they asked you that from 1 March to 31st March, you could use the payment bank. Okay. And you could make a payment up to 20,000 rupees. Okay. Whatsoever payment you will make during the certain period of time. Okay. It means that suppose you have invested rupees 15,000. Okay. On payments by using the payment banks. Okay. So the bank will make a bill of 15,000 and thereafter this bill will sent over to you and then you are required to make the payment to the bank. So that's how the payment banks work. Okay. If you do not have a money at a time you are buying something, you could use them. Okay. and then you can purchase the item up to the limit you have got from the bank during a certain period of time, and thereafter you will receive a you can say bill to be paid off up to the amount you had spent. Okay. Thereafter, next is the small finance bank. Small finance bank. Okay. Mainly attached with large banks of financial institutions to make investments or to finance the customer. Okay. So the small finance bank, like by their names, you could understand that they are small in nature, which means that their capital is low in comparison of other banks, right? So generally these banks are attached with some large bank or the financial institutions because they have a very limited capital. Okay. And they are especially in the business of investments. Okay. They generally make the investments in MSME. Now, what do you mean by the MSME? These are the micro scale and medium enterprises. Okay. Or you could call them those businesses which are not capable to afford a investment from the large scale banks at high interest rates. All right. So in these situations, the small finance banks plays a vital role. Okay. And these are the part of the financial inclusion. All right. Thereafter, the sixth term is digital transformation. The rise of digital technologies has revolutionized the banking industry, leading to seamless and instant banking transaction, paperless banking, and personalized customer experiences. Okay, if we talk about the digitalization, then the major breakthrough was come with the Digital India Mission, launches 2016. Okay, and which has revolutionized the banking industry, leading to seamless and instant banking transaction, paperless banking, and personalized customer experiences. Discuss them one by one. Okay, so the first is the seamless and instant banking transactions. Okay, if I talk about 2007, 2008, and 2010 years, okay, suppose this is you and you didn't have any cash with you, but you need an item worth rupees 10,000. This is I'm the seller. Okay, now you are required to pay me the 10,000 cash, but you didn't have them. Okay, so what are the other payment modes to pay the amount without having the cash? Either you can make a bills of exchange. Okay, you can create checks. Okay, thereafter you can make demand drafts. All right, you can use promissory notes. Okay, you could use overdraft facility. All right, you could use credit cards. All right, so these are some of the ways you could use to make the payment. All right, if you didn't have any cash, let me tell you one thing. These payment modes were not easy and having trouble in cashing the amount. Okay, none of these payment mode, it's so easy. All right, and why I'm saying this? Because suppose accept the credit cards. Okay, accept the credit card, and even you can say these two factors, overdraft facilities and the credit cards, right? And about these also there are some problems which I am telling you right now. Okay, suppose this is the your bank account A, this is seller's bank account B. Okay, so if you use bills of exchange, checks, demand draft, promissory note, the first thing is that payment could not be made instantly. Okay, because you have to give a certain time period or mentioning of the date on which the payment should be made. Okay, the first thing as a seller, I have to wait to the date. All right, and then there is a big issue of the bank accounts. Suppose if your bank accounts are in the same bank, A to A, so on the date of maturity or on the due date on which the bills of exchange, checks, and demand drafts, promissory notes were made to pay me 10,000 rupees, I could directly reach the bank. Okay, the bank will examine the all and facts and figures related with this thing, and then they will make me a payment. Okay, maybe it took some time, but less time. Less time to which? Less time to comparison with the account having in another bank. Because if this is happen, okay, so when I will submitted my bills of exchange to the bank on which you had made the bills of exchange, check, demand draft, and whatever you can say, then this bank will deduct the money from your account. Okay, then the money will transfer to my account. All right, and this is a long process. Okay, because the bank has to you can say verify whether your account carries rupees 10,000 or not. Okay, second thing, they had to deduct the amount from your bank account by taking your consent. All right, thereafter the payment is to be made to me, and this will take almost 3 to 4 working days, very easily. All right, so now why these methods are not so convenient for the point of view of the seller, let me tell you one thing, and now you could understand me. All right, suppose you had bought an item from me on 1st March. Okay, then you had made a check, bills of exchange or demand drafts for 31st March. So the 1st March is a drawing date on which either of things were drawing. 31st March is the due date on which the payment is to be made to me. All right, suppose if I submitted the bills of exchange, check or demand draft, promissory note with the bank on 31st March. Thereafter, all the process will take almost 3 to 4 working days. All right, it means that nearly about 4 April, I will receive the payment of 10,000. How many days it took? 31st and 34th. Total 35 days were taken to pay me only rupees 10,000. All right. So just think about it. If you are the seller, or you are a small scale seller or medium scale seller, not a large scale seller. Okay. If you had reduced your stock and gave the item worth rupees 10,000 to any person, would you wait for 35 days to get your payment? No, because you required the payment now so that you could deduct your profit, suppose rupees 2,000, and the remaining 8,000 will be spent to buy the more quantities of the thing, because you had reduced the quantity by selling it off. Okay, so if you want this thing, then you have to wait for 35 days. then only you can get the payment. So it is not so convenient from the point of view of the seller. All right. That's why, that's why credit facility provided by seller to buyer was limited in nature. Okay, it means that sellers were not so encourageous when they give the items on credits, because they do not want to wait this long. Okay, they do not want to get you can say efforts, like you have to reach the bank, then you have to wait for some time, then you have to verify, then you have to connect with this person, and this process is so hectic and so long. Okay, so that's why the sellers mostly ask to make the payment on the spot. They do not agree to go with these things until or unless the amount is big, the seller is big, or there is a good relations between the buyers and sellers. All right. That's why the businesses were not so good in the condition as they are today. Because as in the business, generally credit facilities are required. Okay. Second thing, if we talk about the overdraft and the credit card, like I had told you, they are the payment mode. Could be used for making payment now. Okay, you could use the overdraft and credit cards. Okay, but the situation is, the first is overdraft must contain debt limit. It is the first condition. Overdraft must contain debt limit. Okay. Second is credit card machine required. All right. First thing is that overdraft which you are using to make the payment must contain rupees 10,000. Suppose on your account, if 5,000 overdraft facilities is, you can say, required to be made of. All right. So you couldn't use it for rupees 10,000. Okay. Second thing is credit card machine required. You must have seen a sweep machine, which is also called point of sales. Whenever you visit a restaurant or petrol pump or wherever place, you must have seen that these guys carry this kind of machine. And this kind of machine could be used to make the, you can say, payment from credit cards and debit cards by swap. All right. So these are the conditions necessary to make the payment from using this. And this is also generally not available with the sailors, most of the sailors. So now let's talk about what digitalization does in the field of banking to make the payment if we do not have a cash on that time. So the first thing is that using the UPI apps. If you do not have a cash on that time, you could use the UPI apps. Okay, so that by scanning the QR code of seller, you could make payment. Okay. Second option is that if the seller do not have any QR code, fill his phone number, attach with bank, to make payments. By scanning the QR code or filling the number, you can make the payment. Okay, these are the options available with you. Even If suppose the seller do not have any of these things, okay, then third option is by using net banking option, you could make the payment. Okay, in the net banking option, basically, if we talk about the banks, like suppose the bank account is of the XYZ bank. Now, each and every bank, almost every bank, having their own mobile application or their own website, which could be used to suffering for the net banking. You could go there. You just require to fill the banking details of seller, like his account number, IFSC code. Okay, then you have to fill your mobile number and OTP, and then you could directly meet the payment to the seller. Okay, it means that you had bypassed the bills of exchange, promissory notes, checks, demand drafts, credit cards, overdrafts. You had bypassed all of these difficulties. So now, how you can see how convenient is the way to make the online payment if you do not have the cash. Okay, this encourage both the sellers and the buyers to give the credit facilities and to use the credit facilities. Okay, thereafter the paperless banking. Suppose this is you, this is your bank called XY. Okay, remember your ATMs are also the part of digitalization. Okay, so basically, if we talk about this time period, if you want to withdraw rupees 10,000 from your account, okay, then if you're not using the ATM, then first you have to visit the bank. Okay, you have to fill the withdrawal form. Okay, thereafter, from the cashier, you could get the 10,000 rupees. And please remember that this is a long process. It will take you around 4 hours or more if the bank is congested. All right. So this is the you can say paper banking. All right. But what ATM does? ATMs introduce the paperless banking. Okay. Suppose this is you. Now you want to submit rupees 10,000 to your account. So instead of going to the bank, you could use the ATMs. Okay. You could visit the ATM machine, use your debit card. Okay. And then you can deposit rupees 10,000 in your account. Similar thing you could use for your withdrawal process. Okay. Thereafter, the personalized customer experiences. Actually, nowadays, almost every bank provides mobile applications and websites. Okay. And thereafter, you are required to make your account or log in into your bank device. Okay. Sorry, bank application. And then the bank will notice your activities, okay, by the channel, search engines, and whatever, and then they will recommend you things as per your needs. Okay, this is known as the personalized customer experience. Okay. So basically, if we summarize all the key aspects, then banking evolution is an ongoing process. Banks continue to adapt to changing market dynamics, customer experiences, and technological advancement. Embracing digital innovations and catering to diverse customer needs are critical aspects of banking evolution to stay competitive and relevant in the modern financial landscape. Which means that banking evolution is just not only focusing on the needs of banks, but also on the needs of customer. Okay, needs of competition, needs of dynamic market, and so on. All right. So, students, basically in this lecture, we had finished the key aspects of the banking evolution. In the next lecture, we will continue with the same topic of the banking evolution, but with the more details on it. Okay. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.